6 assets safer than cash. Why keeping money in the bank is riskier than you think. Everyone tells you, just save your money. Put it in the bank, let it sit, do nothing. But here's the uncomfortable truth nobody wants to admit. Cash is not safe. Not in 2025. Not with inflation. Not with broken banking systems. And definitely not with governments quietly rewriting the rules while you sleep. Today, I'm going to expose 6 assets safer than cash. Assets the wealthy use to protect themselves during inflation, recession, and financial chaos. These are not hype. These are not memes. These are time-tested wealth protectors. So grab a tea, sit back, and welcome to another Felix Exposé. Let's get into it. Section 1. Why cash is actually dangerous. We grow up believing cash is security. But here's the reality. Inflation destroys purchasing power. Banks lend your money to others. Savings accounts pay less than inflation. Governments can freeze or seize accounts. Your money is digitally controlled, monitored, and limited. In 2020, you could buy a basket of groceries for £20. Today, 35 to 40 pounds for the same basket. That's not rising prices. That's your money shrinking. If inflation is 5% and your bank pays you 1% interest, you're losing 4% every year by simply saving. Imagine putting £10,000 in the bank. 5 years later, it looks like £10,000, but it buys £7,000 worth of goods. Cash has turned into ice. It melts slowly, quietly, and people don't notice until it's too late. And when banks collapse, people realize the truth. Your money is only safe until it isn't. So what do the wealthy do? They don't save cash. They save assets. And today, I'll show you the safest ones. Section 2. Asset 1. Gold. The original money. Gold is not an investment. Gold is insurance against stupidity. And trust me, the world is full of stupidity. For 5,000 years, empires rose, empires collapsed, currencies came and went, governments failed. Wars broke out, banks disappeared, but gold remained. When everything goes wrong, gold is the last man standing. Why gold is safer than cash. Banks cannot print more of it. Governments cannot create it out of thin air. It holds value during crises. It's globally recognized. It's private, portable, and liquid. It has no counterparty risk. If cash is a melting ice cube, gold is a deep freezer. Smart investors allocate 10 to 20% of their wealth to gold as a lifeboat, not for profit, for survival. Section 3. Asset 2. Silver, the underrated metal. Silver is gold's younger, louder, cheaper brother. But don't let the price fool you. Silver is historically one of the most important industrial metals in the world. It's used in solar panels, batteries, electric cars, medical equipment, electronics, mirrors, water filtration. Silver is consumed, not stored. Meanwhile, global supplies are shrinking. Silver is safer than cash because it protects against inflation. It has real-world demand. It is undervalued historically. It moves more violently than gold in bull markets. You can accumulate it cheaply. And if gold is wealth insurance, silver is opportunity insurance. When currencies weaken, silver often rises even faster. It's physical, real, and outside the banking system. Section 4. Asset 3. Real estate, tangible and everlasting. Even if the currency collapses, even if the stock market crashes, even if the banks fail, people still need a roof, land space shelter, somewhere to live, somewhere to operate a business. Real estate is safer than cash because it generates rental income. It grows with inflation. It cannot disappear like digital money. It has tax benefits. It becomes more valuable as populations grow. It provides leverage without adding risk, like cash savings do. But here's the secret the wealthy use. You don't buy real estate for the price. You buy it for the cash flow. Cash sits, real estate produces. Cash disappears, real estate compounds. Section 5. Asset 4. Blue chip dividend stocks, not meme stocks, not hype coins, not get rich overnight garbage. I'm talking about Coca-Cola, Johnson & Johnson, Shell, McDonald's, Pepsi, Procter & Gamble, Apple, Microsoft, Berkshire Hathaway companies that have existed for 50 to 100 years and will likely still exist when we're gone. Dividend stocks are safer than cash because they pay you every quarter. Their dividends grow faster than inflation. They represent ownership in businesses, not government promises. They historically recover after recessions. They build wealth while you sleep. A good dividend portfolio can turn £300 a month into a lifetime of passive income. Cash gives you nothing. Stocks give you growth plus income. Section 6. Asset 5. Bitcoin, the digital gold. Bitcoin is not a meme. Bitcoin is mathematics. Bitcoin is scarcity. Unlike cash, it cannot be printed, it cannot be frozen, it cannot be inflated, it cannot be censored, it cannot be controlled by central banks. There will only ever be 21 million Bitcoins, not one more. This makes Bitcoin the hardest asset on Earth. Even gold increases supply every year. Bitcoin does not. And with halving cycles, Bitcoin becomes more scarce over time. Bitcoin is safer than cash because it protects against monetary abuse. It allows global 24/7 self-custody. It is borderless. It is independent of any government. It is used by institutions, banks, governments, and billionaires. Bitcoin is not perfect. It's volatile. But volatility is not risk. Permanent loss of purchasing power is risk. Cash will always go down. Bitcoin, long-term, keeps going up. Section 7. Asset 6. Your skills, the most powerful asset. The final asset safer than cash isn't gold. It isn't silver. It isn't Bitcoin. It's you, your skills, your knowledge, your ability to create, earn, and solve problems. Why skills are safer than cash? The economy can crash, but you still know how to earn. Governments can change rules, but your skills adapt. Money can vanish, but your abilities stay with you. Skills compound, like interest. Skills are inflation-proof. Skills generate unlimited income. A person with skills will always survive. A person with cash, but no skills, will eventually lose. Reading, learning, improving yourself. That's the highest ROI investment on Earth. Section 8. Bonus asset, a side hustle. Creating your own income is one of the smartest financial protections. A side hustle creates cash flow, diversifies income, reduces dependency on employers, builds freedom, protects your future. You don't need millions, you need momentum. Section 9. Putting it all together. Let's recap. The 6 assets safer than cash. 1. Gold, the world's oldest store of value. 2. Silver, undervalued, industrial, essential. 3. Real estate, cash flow and inflation protection. 4th. Dividend stocks, income-producing ownership. 5th. Bitcoin, digital scarcity. 6th. Your skills, the asset nobody can take. Cash has one purpose only, to buy assets. You don't save cash, you store opportunity, then you deploy it into things that grow, protect, and multiply. The wealthy don't hoard money, they move money. Cash is a tool, assets are wealth. Section 10. Closing message. The world is changing faster than ever. Inflation is rising, debt is exploding, banks are fragile, currencies are unstable. Governments are desperate, but you don't need fear, you need a plan. And today, now you have one. Store less money, own more assets, protect your future. This was another Felix Exposé. Thank you for watching. If you want more deep financial videos, subscribe, like, and drop a comment below. Protect your wealth. See you next time.